Give us 30 minutes each week to discover the trends that are shaping the future of retirement with That Annuity Show. We bring you conversations with industry leaders who are revolutionizing financial products, technology, and distribution channels. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. Tisa, great to have you.
Thanks, Paul. Good morning.
Yeah, good morning. It feels like I've seen you recently somewhere, but I'm just trying to think where. I'm not sure. In person. Good to have you on the show. Bruno, as always, welcome.
Good morning, Bruno.
Yeah, well, today we've got a very special guest. Somebody's just helped us over the years with a lot of interesting discussions and thought leadership. We have Samantha Chow, who is Vice President and Global Life, Annuities, and Health Sector Leader at Capgemini. Hey, Sam, welcome.
Hi, Tyler, Tisa. Nice to meet you, Bruno. Welcome. I'm glad to be here. Can't wait to talk about this stuff. It's so important to the success of our industry. So I'm excited to dive on in.
Yeah. Well, we actually recorded this podcast live from the floor of LIMRA, and I think your report was that you just released your World Life Insurance Report in partnership with LIMRA. So I think the timing is really good to talk to us about. But maybe you could just talk about it. What is this report? You've done it annually. I think it's unique in the way that you actually pull leaders from different sectors together to build this. So maybe you could just give us a little bit of the backstory, and then we can actually talk about the findings and what it means for people.
Absolutely. So yeah, we take kind of a multi-pronged methodology approach to this, and also a very global approach to it. So we talk to the insurers globally around the world, large insurers as well as smaller regional insurers, to get their perspectives, have roundtables around different topics to align into what we think is the right conversation to have. Then we then take that information to the consumer market. This year, when we'll talk a little bit, we really targeted that under 40 market, whether they're a policyholder of a life insurance or group benefits or an annuity, doesn't matter. And we then also took that information that we learned from the consumers that drove an additional deeper survey that we could produce with LIMRA and get out to insurers globally to find out what they're doing, the actions that they're taking to actually get through to this under 40 group.
Well, maybe we just start poking right there, because I mean it's impressive that you actually interviewed 6,000 people. Is that what I heard? All under 40. And if I've got it right, I think your study said that 68% said life insurance is essential, but then they don't get it.
Yeah.
Sam, why?
Yeah. Well, a couple of things. Number one, they say it's too expensive, and they're on pretty tight budgets. Cost of living is pretty high these days globally. They also would rather spend their time and effort enjoying their lives and traveling rather than putting it into something like life insurance. And we'll get into how they see life insurance in a moment, but rather put it somewhere else, put it in a savings account, build that nest egg. They like to think that they're going to retire much, much earlier than our current generations are retiring. So the third component of that is what I was alluding to a moment ago. They think of life insurance as death insurance, right? It is something that I'm going to use or someone's going to use when I die. Why should I put money aside right now for that when I'm not married, I don't own a home, I have no children, I don't really have debt, except for my student loans. And, honestly, those die with me. No one else is going to be responsible for those. So why should I set somebody up with money that I could be putting away in a savings account or something that's going to yield a much higher benefit or give me the flexibility to use it when and where I want to for whatever purpose and reason I need to. So kind of three major areas that are driving them to say, hey, yeah, I get it, but I'm not there yet. I'm not ready for that. And I certainly don't see the benefits of it helping me through my lifetime.
Thank you. So, do you think like the shift is coming in the sentiment and attitude towards it, or is it just the shift of like those bigger personal events happening later? So, like, it's still important, but I can do it at 45 instead of 25 because marriage is later, buying homes is later. I'm just curious your thoughts there.
Yeah, no, I mean, I do think that that is some of it, right? But I do think that there is a little more to it. At the age of 45, those of us that have been in the industry understand that it gets kind of expensive. It does get really expensive. I mean, they see it expensive today, but they're not understanding the benefits that they can use in their life, or the policies become rider after rider after rider add on after add on, and that to give it the flexibility that needs to be a usable product within your lifetime, living benefits, right? Critical illness riders, cancer writers. There's so many long-term care writers, right? All this just adds on to the cost rather than being built into the product itself. So then it becomes unachievable for them. They're not going to kind of go forward and purchase something that they see isn't kind of fit for their needs for the day, right?
Mm-hmm.
And that seems to be a very global trend. I mean, the report shows every single geography is actually showing decreasing penetration rates. And these are all mature markets. These are all, uh, you know, uh, global economies that just see, like, where people just see that need decrease across the globe. Um, I find it very, very fascinating. You talked about the cost of living, the need of enjoyment. Anything else has changed in a way that is so global and so dominantly present.
Yeah, no, absolutely. And I think that again, this is not geared towards any one, culture
Right,
or geographical location. Um, it is it's a global phenomenon. And I think the other part, and maybe we'll get to this, is we think about this younger community and the first time that they're ever being exposed to life insurance or protection products is in the workplace. And
right,
those are products they don't take with them, but should be able to take with them, right, where they go.
right.
But we don't have a lot of portable options when it comes to life insurance. Most of those life insurance policies are just of the basic. And even still, they question, should I take it? That's an extra, $5 or $10 out of my paycheck. But no one sits down and explains, $5 or $10 is nothing for these types of products that can help in any situation and moving into the future. So
Do you think that the gig economy is playing there, because that is a phenomenon that was maybe less developed not that long ago, and where you know uh, young workers maybe don't have the same relationship with their employer, or they don't even have an employer sometimes.
right, yes, gig economy is large, but I think I refer more to an entrepreneurial. Right, I want my own control over my own destiny, whether I'm working for Uber, or driving, or Uber Eats, or whatever it may be. Um, the having access to things that or access to life insurance, annuities, retirement products, all of this is it becomes much more difficult. But at some point, they will have probably worked for some employer and made a decision to go down this path, right? Um, that said, portability is key to this younger community because they bounce around, right? 2 or 3 years here, 2 or 3 years there. And every time they bounce around, they lose a potential, long-term benefit of having a real universal or variable universal type life insurance product.
Yeah, interesting. There are a lot of contradictions here, Sam. Like, and I'm thinking, Yeah, I bet they'd say they understand Bitcoin, but you mean really they don't understand life insurance? So I guess there are three layers. Like, I mean, and I do, by the way, see echoes in the annuity space. Well, we can probably get there.
Mhm.
It's very. I think if you just change the age group and the dynamics would seem very very much similar. So I think to what extent, and the answer may be all of them. Is it a product design problem? Is it an education problem? Yes, they know about it, but they don't really know how it works. Versus it's a social phenomenon because there aren't that many agents out there. When was the last time an agent knocked on your home's door, to sell life insurance or called you versus, had friends and social networks saying, hey, look at these meme coins. Go buy GameStop stock.
Yeah, no, it is all three, right? I think I'll start with education because I think that's the easiest, and I hate to say it, but it has to be said that we have done a horrible job in educating our global economy on life insurance and the importance of it. That hasn't always been the case, right? I throw out the example of my grandmother. She's going to be 96 in December. Has a policy since the day she was born. All of her children, policy since the day they were born. So my mom, aunts, and uncles all have their own policy since the day they were born. My brother, who is 7 years older than I am, when he was born, my grandmother bought one for him. But after that, nobody. I didn't get one. Right? Why is that? It's the change in economy, right? The risk of, I need to hide the money under the mattress. I need to protect, if something happens, I can't bury my loved one, or, I don't have reserves and savings. And, it's all about preparing for the future in an unknown. So we get into this era, these under 40 have never experienced any kind of economical crisis or financial crisis. And I don't know that I would say in the last, 25, 30 years that our economic crisis was enough to impact most individuals. So they don't understand the need to kind of put away. Their desires to put away are so that they don't incur debt, and they get to explore and have fun and travel and retire early. So educating them on the importance of it, even given the situation, right, that you haven't experienced, is a shame on us, especially when it comes from the workplace benefits where we have a great opportunity to do so. The second is, product. I just said, the way we look at the world, that young under 40 looks at the world, is completely different. To the extent of those that own their own cars, they don't really have insurance anymore. They don't carry it if they don't have to. They may carry the basics and the cheapest version they can, and they put money in a savings account. So if something happens, you see it more and more with flood insurance in the U.S. or in Florida, where people like, I'm not necessarily in a flood zone, or I own my home outright, so I'm just going to choose to put money aside. It's the same mentality. So our products today that are only usable for, like I said, death insurance, when I die, don't give them any benefit. Don't give them any hope that if something happens, that they get diagnosed with cancer. They have some major debilitating accident that causes them, a disability where they're no longer able to work. You lose a limb or something, those things aren't built into life insurance, which means I've got to have other products. So another great example, and I live by examples. My son is a mechanic. He finally master mechanic, started his first real job, injured his hand, not bad, but he did injure his hand. He realized very quickly, like, I can't work. What do I do? Like, I need like 3 or 4 days off, which means 3 or 4 days off, no pay. Well, he should be considering the right kind of insurance to cover him in some situations like that, right? So we don't educate, and then we don't have the right product that we're sharing with them, and that takes, to your third point, Paul, the right types of agents. Our agents are as old as our policyholders, and most kids or, less than 40 are looking to talk to peers their age to understand, right? They're going to understand the way they think, what they're looking for, what they need, and where they're going. And we don't have that today either. So we're kind of missing that opportunity to build up on our agent force as well as change our products to be flexible and modular to grow with life stage as well as the education component.
So where do we start? I mean, we kind of talk through the challenges and the opportunity. I mean, I hear the themes of portability, flexibility, maybe more bundled products that can follow or move with, a client through all the life stages. I guess maybe let's talk about product design and the opportunities there as far as, what you either heard or the research brought out in building products differently.
Living benefits sounded like
Yeah.
what you believe to be an important piece.
Yeah, I mean, I honestly, living benefits are imperative to this, and it's, again, it can't be a rider. It can't be an add-on. It has to be a product that is a life insurance that has some kind of investment. So you say, I'm saving. You are saving. You're saving for any kind of, homeowner problem, or if you need to be able to support, go get a new car, put a kid through college or something. You're putting this money away for those rainy days as well as, whatever comes of the future. You need to know that you're protected for any type of cancer. I mean, I forget what the statistics are, but it's crazy how many of us will end up with cancer before we die, that needs some kind of treatment. Yes, we're getting better at it and we're surviving, and that's great, but can you afford that treatment? So, this product needs to be able to help you through that. Fertility is another one. My goodness, we've got some great startups in that area, but the younger generations are in fear of not being able to have children, even though they're deciding to do it later, but they are in fear of not being able to have children. So to your point, Tisa, it is about that bundled or packaged product that can be used throughout their life. That, I think, those points in the life stage and how insurers create that bundled product is what's going to help them stand out, right? If you consider each life stage, regardless of where it happens in their timeline of age, those major events should be captured somewhere as a benefit within this life insurance policy. It has to be a life insurance policy throughout the course of someone's life, but also bring benefit in the end in death for your loved ones, if that's where it ends up.
Yeah, it's I've heard a lot about bundling. Now, I was out this weekend with a friend of mine who works at one of the big brokerage shops who does supports life insurance sales, and we had some real interesting conversations about LTC riders. And that's more for sort of the older market, but it's an important consideration because you can't really afford long-term care as we thought about it. So how do you provide some care for somebody today? So we're starting to see some interesting designs, Sam. Like, I think on the LTC side, I've seen some very interesting ones where, the cash value may be very, very low, but the LTC benefit base is much higher.
Mm-hmm.
I think that's sort of for the older. For the younger ones, we actually work with a company. I won't name the name here, but they built an IUL designed to be sold online and kind of give people the flexibility, much higher degree of flexibility in terms of saying, I really, really, really only want term insurance up to this point, and then I can almost turn it into a savings account later. Are those the major feature designs? Do you see others, coming down the pike?
Actually, I don't see people doing a lot of that. That the old fashioned, return of premium term. I mean, if you think about it, I have seen coming back a little bit the idea behind decreasing term, which is great if you purchase a house, right? You buy term insurance for a purpose, and that purpose is to cover the house. So if I was to pass, right, my next of kin, whoever, if I'm not married or have no plans to get married, whatever, whoever is going to be responsible for that will have the money to take care of it. So it serves a purpose. But to your point, if you think about the options of saying I have a term policy that I'm going to take out for 20 years, return a premium. It's still a purpose. Maybe it's maybe it's for college. Like my kid will be out of college by this time. If something happens and I pass, and then there's no one here to fund his college, um, you know, to take that return of premium term and then being able to convert those funds that were in that premium into something in the future for another purpose is a phenomenal opportunity. But we don't do the return of premium term any longer. And I don't know why, because it's a great marketable, because it's like just putting it away for a rainy day, if you will. Because in 20 years from now, if I die, then I get someone's getting my cash benefit. If not, I've just been putting it away. I don't see it. So I don't see a lot of change happening, is to my point, and that there's a lot of old types of products that we used to sell more of that we don't any longer, that are just as relevant or more relevant today than maybe they were in the past.
Yeah. Hey, Bruno, do you have any answer on that question? Sam's right. I haven't seen the return of premium for a while.
Well, I think from a pricing perspective, it was easier when interest rates were higher. So you have a little more margin, a little more ability to earn a spread. Now, when interest rates go down, that ability kind of decreases from a carrier's perspective. So I could see why over that long period of time that could partially explain.
And Tisa, if we go back in time, you and I have a lot of experience selling living benefits.
Yeah.
Right. What are your thoughts there? Oh, it's easy to sell those, right?
Well, I mean, I hear some of it's in like the education and the language, right? Like not calling it insurance, calling it savings for life, like just kind of making that up on the spot, but following you through your life and those milestones. And the other thing I was thinking about with like a product like return of premium, it's almost taking the nods from society and just adjusting to what people are choosing to do from a lifestyle perspective. That's kind of what I hear you saying, Sam. Mm-hmm. So for example, like, yeah, I may not buy a house or I may not have kids, but I don't know, hashtag online, like hashtag rich aunties. Like there are plenty of adults who have decided not to have a traditional, family or make traditional, air quotes, traditional decisions. But that doesn't mean they don't have, 4 young people that they look at as nieces and nephews, may not even be by blood, that they would not mind having some funds available to put them through college. So it's just, I guess I'm just sort of thinking through some of these shifts in societal norms where the opportunity's still there. It might be a different role as far as the who, and it might be different timing as far as those life decisions. So
yeah, and let's not forget, again, I talked about how like historically, the older generations have planned. Right? They've done the life insurance, they've done the retirement plans, 401ks, they have pensions, right? They're the dying pensions of the US. Obviously pension is a much greater thing in other geographical locations, but from our US perspective, we don't do that as much as we used to. And we don't put money away in these retirement plans or, annuities and things, at the younger generations. That wealth transfer that's about to happen over the course of the next 10, 20 years, where we expect that on average, every young adult will receive about $200,000 in wealth transfer over the next 10, 15 years. What's going to happen to that money? What are they going to do with it? Where's it going to go? And today I can tell you the bank is going to win. They're just going to put it in the bank. They're going to buy some, investment fund, or they're going to, buy Bitcoin or, whatever it may be at that point in time. But it's not going to be life insurance. not unless
They're
we
going
get
to
our
buy
act
2 more
together.
Airbnbs and have some flow income.
That's right.
Well, yeah, well, and just to, Paul, I think just to echo what T's saying here, I think okay, your data. Tell me if I'm wrong here. I think you said, let me just look through here. I think 63% of under 40s have no marriage plans,
Mm.
and 84% have no immediate plans for children. And the population under 30 across the globe is going to remain flat. Sam, maybe I should just shut down my insurance operation and go for that wealth transfer in the annuity space. Is that the takeaway here?
Could be.
Shifting a little more to annuities.
You're right, right. No, it very well could be. I mean, if I think about the right place for a lot of this is like, how do I convert that $200,000 I'm going to get in the future to work for me in retirement? You know, um, and most people, I think, when they receive this money, will be, from somewhere between 40 to 60 years old. So being prepared for that means you have to build loyalty and understanding and education in order to help those individuals prepare for what's to come, to make the right investment decisions. Annuities are, we talk about, the pension of the future, or well, now, if you will, from a U.S. perspective, is an annuity, right? A flexible annuity where I can continue to put money in, as a savings, for my future, and those that are those younger generations, they're not being explained what that is and how those work. And you're lucky if you've got some group annuity company that's built into your employer benefits. Those are fabulous, and those that do typically participate, but you don't see it. It's not very widely seen at this point in time.
It's interesting too, because I think like the decisions are different, but the goals are the same. So in other, surveys or kind of media, I've seen that when you ask people what their goals are, what they're looking for, they still are looking for the pension-like behavior, right? Like they still want that guaranteed income and an understanding that they can maintain their lifestyle. So you can tell me, like in your research, seems like goals for under 40 would be the same. Like it could be that they just want to go on a huge trip 5 times a year versus once in a lifetime. But like ultimately they want to have income and saving to support their lifestyle. Lifestyle just looks different.
No, and I think but I think the lifestyle actually kind of looks the same. I think it's more active. It's more ground on health and well-being, and I think it's also ground on the fact that our younger generations don't live to work; they work to live. They get into this, and they want to be able to travel, they want to be able to take their vacations, they want to be able to see the world and explore, they want to have a good impact on society, and in order to do that, and retire much earlier, right? In order to do that, they need to start putting things away now, being very smart in how they live, rent, not buy, not be tied down to something specific for a long period of time until they're ready to put roots down. So I think, and to your point, Tisa, I think that the goals and objectives are the same. They're pushed out quite a bit. And I wouldn't be surprised, and this is me speculating my own personal opinion, that in a generation or two from now, we start to see a huge shift to like back to marrying younger, having children younger, different types of work, different types of work ethic. I feel like I'm starting to see a little bit of that now. And maybe that's a result of this current younger generation taking their kids out and traveling the world. They've already done it,
Interesting.
So
The shift
that again
back.
might shift, but in order to be there for the industry, we've got to think about it from a flexible modular product. One, to your point, Paul, where return of premium term that could then roll into an annuity, a deferred annuity for, something, I'm sure, Bruno, we could come up with the pricing for that would be beneficial to both sides of the house. So but I mean, I think there's a lot of options. I think there's a lot of ways to create product. I think there's a lot of different ways for the insurance industry to tackle the product problem from a product standpoint. The hardest part is going to be tackling it from a distribution standpoint, and how we make this younger generations privy to the benefits of those products, and the purchase of those products, and how they fit their financial goals and wellness goals of the future.
Well, and talk to us about phygital products. Did I say it right?
Phygital, the combination
Phygital.
between phygital or physical and digital. Yeah, I mean, again, this is, if you think about your investments today, like, or your bank, right? You can go on your mobile phone and you can move money around in your banks to different places, right? You're engaging, physically moving, but you're also digitally engaging with your policies on your bank mobile app. Same opportunity can exist here to be able to shift from, that physical environment. What am I doing with my policies? I can, if I've got a variable, investment fund that I can move things around with and play with, whereas you don't necessarily have, it's not as easy to do today. I can help and play an active role, which the younger generation wants to do. They want, they want it in the palm of their hand, literally. And they want to be able to have some control over what's happening with their savings. So, layer in the phygital engagement, right? Like, I can be one-on-one, here we're digital, we're talking to each other, through our laptops. But, the ability to kind of be able to see each other at the same time is, makes it more physical and emotional. So, there's the way you sell in a phygital manner. It's the way you engage and the products you develop, and how they engage with the customer. That's also a phygital way of doing business.
So just on the technology front, I mean, I don't think the conversation would be complete without getting into that topic. We talked about how much sometimes the industry is a little behind when you compare it to other industries. What, in your view, is the low hanging fruit? What is that one thing, or that the top three things that the industry can do a little different to adapt a little more to that demographic of interest that you mentioned?
I think the first thing is an ecosystem, recognizing that as an insurer, you can't do everything on your own, right? I think I mentioned, long-term care, for example, is an opportunity. I mentioned, critical illness. I mean, most insurers, life insurers, have critical illness, but long-term care maybe not. Health or wellness opportunities, fertility is another one that I mentioned. Pet insurance too, being able to blend your life insurance and pet insurance. I mean, this is me just art of the possible, but being able to, I don't know, partner with Nationwide for Pet, or these new startups on fertility, and say another benefits provider, or Aflac, with their cancer type products, being able to partner with these to create that flexible product. I get it, it's complex. But that's kind of I think the first thing that we can do is evaluate, what does that ecosystem look like? And in order to have the right ecosystem, you really have to have that strong, like, API integration layer, right? That will help you connect to your different your networks. I think the other thing is that we can do right now is create that ease of doing business for our agents and our brokers and our advisors. Being, you're trying to recruit younger agents so that they can fit the bar, they can talk to their peers, right? And help them understand in their language why things are relevant. You have to be able to educate them. And of course, we can't sit down with them and hold their hands 100% of the time. Now, instead of knowing 2 or 3 or 4 main products, they've got to know a ton and the benefits, right? The many different benefits. So the use of digital tools, AI guided conversations, and feeding them, what's your next best action, what's your next best product, and how does that fit into this person's, very specifically into this particular person's financial goals and objectives. So being able to feed them, spoon feed them, so that they are smarter and learn more rapidly is what's also going to be I would say kind of the low hanging fruit for solving some of these problems. And to solve the product development problem that we have, unfortunately, it's going to have to take a very flexible policy administration system or a low code, no code system that will help you kind of initially in the forefront create some of these experiences, create some of this flexibility in our products to drive that change forward.
Excellent. Well, we're close to our time here. I don't know, Tisa, do you have any last questions, thoughts to share?
Well, I think what you just broke down, Sam, like the combination of how we, tackle both technology and product design to not only bring agents into the industry, right? Like bringing the younger agents in helps solve part of the bringing younger clients to the table problem, but also, of course, addresses some of the consumer and client needs. So, yeah, I think the way you broke it down is super helpful. I think, technology is obviously going to be a big part of that. So appreciate your time today.
My pleasure.
Bruno.
No, thanks for coming. Just closing the loop on everything. So there's, if I understand you right, there's still some work to be done in this industry. So, so thanks for coming and sharing.
Yeah. Fortunately, it doesn't have to be tomorrow, but it needs to be quick. And I think before we started this podcast, Bruno, you said heads down on that spreadsheet. It's the spreadsheets are important. The knowledge, knowing what's going to happen, who you want to be as an insurer for that under 40 segment. I used to say who you want to be when you grow up, but now it's okay. You're grown up, right? But now we have to figure out who we want to be for that under 40 segment. And knowing the data, knowing your numbers, knowing where you're strong and where you want to sit as an insurer, and how you want to transition to fit the needs of that aging community as well as that younger community is going to be pivotal to every insurer's success in the future, as we're honestly going to be constrained by a much smaller target market. Not only are you competing with each other, you're competing at a rate that is much lower than it's ever been.
Yeah, well, it's interesting. I'm optimistic, Sam. We're going to get there. I've seen some really interesting advances in some of the platforms out there in the industry using AI. So a great demo of an annuity quoting engine. Linking, talking to AI. You're almost talking to a sales desk. So I think there's a lot of promise. I think AI is going to get us to where we think the future should be quicker than we ever would have. So listen, so if anybody wants to find the report or they want to connect with you, what's the best way to do it?
If they want to connect with me, very easy. Email address is samantha.chow@capgemini.com. You can find the World Life Insurance Report and all of our thought leadership on the capgemini.com website.
Excellent. All right. Well, listen, thanks, Sam. Thanks for joining us, Tisa, Bruno. And for our listeners, thanks for joining us. Be sure to leave comments, recommendations on Apple. It helps us. And most importantly, join us again next week for another great episode of That Annuity Show. Thanks.
Nassau Financial Group is always working harder to be your carrier of choice. We build products that help protect people's savings and are dedicated to providing you with best-in-class service. We seek to keep things simple and have your back in the years to come. Nassau is headquartered in Hartford, Connecticut. Learn more at nfg.com.
Zinnia, an Eldridge Industries business, simplifies insurance. It delivers comprehensive solutions for the industry's most critical needs and creates the modern rails of the insurance industry. To learn more about Zinnia, please visit zinnia.com.